video, I just wanted to kind of go over some things about in reference to the PDF, I guess you could say, of what I put there so far, right? And I'm just only going to be using what I have put into the PDF so far in order to analyze this trade, right? So you're in the $0 short right now, and you have basically starting off with the blank chart, right? You have a few things that I did notice here, and there are lasting few things that actually happened, right? Was a major sell side liquidity take, right? I always look for like the last 2 or 3 things that may have happened because of the trading range rules, right? That I've shown in the video. So you have a 4H break structure, right? Right here. Took a major sell side liquidity and broke structure. I don't know why that's. And essentially, it broke structure, price came up and then filled this very nice imbalance right here, right? You can think of this as a major sell side liquidity take. I put 4H just to represent a major kind of 4-hour structure break. You can just put 4H sell side liquidity or whatever you want to, or just regular sell side liquidity. But I do like to differentiate my higher time frame stuff from my lower time frame in that regard, right? So you had an imbalance here, pretty obvious, right? Price came and filled that, and then continued to the downside. And I'm just going to mark up where it wicked out at and everything, right? So that's the first thing I do see when it comes to EURNZD and the dollar, right? And obviously you're gonna mark up the liquidity. And I would say like this wick right here was all of the buy side liquidity that I saw in this trade right here that did happen. And going down, it had a continuation from there where it also broke structure again, right? And you're like, okay, bet. And this is in reference to everything that I have currently in the PDF. And I'm not done with the PDF yet, nowhere close. It's just like the very beginning of it. But I'm gonna make this go up just a few notches. All right, so you have price break structure and basically price broke structure. And really, if you look right here, this up candle before the drop was the one that really started the break, you know what I mean, in order to break structure in that regard. If your background noise, just my daughter, she's watching cartoons right now. It shouldn't be too much interference. I think Zoom does a pretty good job of keeping out background noise. They have like a filter for it. It's not a big deal. Parenting thing, you can't always have quietness, complete quietness when you're a parent. Sometimes you have to dual wield and have parenting responsibilities while doing stuff like this too. All right, so yeah, another 4H structure break, aka sell side liquidity take. Major one on 4-hour, and then price, after they chase sell side, of course they have to chase buy side. And as you know, and as taught in the education, before any trade happens for sell, they have to take buy side, you know what I mean? And before any trade happens for buys, they have to take sell side. So I consider that my order block this bullish candle before the drop and not this one, because if you move this to here, right, price traded pretty well above that order block. Like I like to have it hit the equilibrium at best. So this would have been technically a better order block right here. This one that actually started the breakdown to cause the structure break right here. So just a little bit of a little bit more accuracy, I guess you can say. You have to use kind of your common sense a little bit. And I'll also mark up where that one actually wicked out too, just basically at the equilibrium right there. And I don't like to mark up the equilibrium too much anymore because I have a really good eye for equilibrium now. I've been using it for so long that I can just kind of see the 50% of the candle, you know what I mean? 50% of this candle right here, right? So that's going to be the equilibrium. It worked out, perfect entry, right? And of course you have to also still mark up the buy side on that. And I would say it's up to this wick, because when you drop down to the 15-minute, it's going to reflect as more, a lot of candles. So buy side liquidity. So there's buy side liquidity there, and price had a continuation, right? So what do you notice here, right? This is where price basically left off, right? They did not quite. Oh yeah, I would say they did. They did take this sell side liquidity right here, big major structure break when price traded below right here on this wick with this bearish candle right here. So they did take that, just barely, but they did. And now, right, you can expect a retracement, right? Every time price takes major sell side on an impulse move like this, as described in the PDF, price will retrace and take buy side and then have a continuation from some type of institutional footprint, specifically from the last impulse move that took the major sell side or broke structure on your higher time frame reference, right? So, I mean, in reference to the PDF, you had, I mean, I guess you could count this too if you wanted to count up here and go a little deeper, but you basically had a repeat, you know what I mean? Price came down, came back up. This, basically mitigated this small fair value gap right here, small imbalance, had a continuation, broke structure right here, came back up, took buy side. That's basically a major sell side on the 4-hour take. And then they took buy side, mitigated the order block perfectly. So all of the buy side is going to be in the latest impulse move, that broke structure right here. And I had mitigated it, had a continuation, broke structure again, major sell side. It eventually has to plateau out. Price came back up once again to buy side, right into the order block. And typically, like 90, 95% of the time, it comes into the order block that caused the break of structure or the major sell side liquidity take. That's obviously going to be the one that banks are using, since they pushed price down, they took liquidity, right? They used that same order block to take liquidity. And if you look here, what's a common theme, right? From wick to wick, right? You have discount below this 0.5, which is the 50% right here. And you have premium, right? Premium territory you're going to want for sales, discount territory down here below the 0.5 or the 50% you're going to want for buys, right? So that's, you can see that this was obviously in premium territory. And if I take this and move it here to this one, this latest impulse move right here, that broke structure, you can see that this was also order block right here was also in premium territory. It doesn't matter if it's barely in premium territory. It just matters that it's in premium territory. That's all that matters, right? And the trend continues, right? So now we can expect a retracement back up, right? So be sure to mark up your liquidity. So make that a rule. Every time you see this happen, boom, where the 4H's are, 4H, 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 you can see a common theme that happened. Every time a major sell side liquidity got taken on the 4-hour, price retraced back up into premium territory for shorts and mitigated the order block that was in premium territory, right? So that's buy side liquidity right here. They just took sell side again, broke structure again. And now I'm willing to bet that they are going to be taking buy side again, because they have to take some type of buy side before the continuation. New Zealand dollar is short. For now, Q1 2023, maybe 6 to 9 months, they might be able to regain some ground in the euro. But for now, they are still short, right? Let me get this pretty much right on top of that wick. Perfect. Always do the highest wick because these candles will break down. And now you have your higher time frame liquidity in line, right? You have buy side taken, you have sell side taken, trading below right here. And now you have another more buy side up here that has to be taken before they short again. They don't just continue on. They have to take some type of liquidity, basically convince buyers that this is a buy as taught in the education. And then once they take those buyers out, they have a continuation, right? So you see a common theme here, right? You see a very common theme here that's been happening, and this happens on the all time frames as well. You see a very common theme that happens here, right? In regards to how liquidity is distributed, right? Boom, structure is broken right here. Boom, take a major sell side, right? And this impulse move that did cause this right here is going to be your new trading range. Price should not violate this high right here that started to break, right? That would be considered a strong high, and I covered that in the education as well. Boom, right? Major sell side taken, and then price comes back up and takes buy side and mitigates the imbalance or some type of institutional footprint. It doesn't always have. It's not always an imbalance, but most of the times it's an order block or something like that. But oftentimes it can be an imbalance too, right? So you have to kind of see what institutional footprints are going to be present in that impulse move in premium territory for shorts and in discount territory for longs, right? Price mitigated it, came back down, broke structure again right here, right? In this area, came back up, right? And now this is your new trading range from here, where this yellow kind of circle is that I highlighted, and where I last left off, which is right here in this area, right? And then they came for buy side again, mitigated it perfectly, came for sell side, took that, and now they're going to come for buy side in order to have a continuation, right? So in order for that to happen, right, they have to actually have a retracement. So like I said, you can think of this as every time price takes sell side or break structure, they're gonna come up for that buy side as well, right? So now I'm looking at this as like these wicks are also equal highs. This is the only buy side liquidity that could be taken, right? So now you can use that to drop down to the 15-minute, right? All right. So now you have your higher time frame liquidity kind of in line. You know what I mean? Zoom out. Now all I'm going to do is repeat the process, but on the 15-minute, right? In reference to the 4-hour, real quick before I move on, actually, I forgot a step. Now you know exactly what likely is going to happen, right? There's a very high probability scenario that's going to happen. Price is going to retrace because it just got done taking sell side. So what's next? You have to take buy side. Price is going to come up, retrace, basically hit this order block right here, right? This is the last order block that institutions used to take liquidity. So this is going to be respected, right? So they're going to come up, take buy side, type this order block in just like they did here, right? And this is all the liquidity right here, and then have a continuation, right? So a 15-minute time frame, we are going to drop down to. So all you're using is your higher time frame liquidity in order to kind of gauge the 15-minute, right? So now I'm gonna zoom in and look at the same thing, what happened on the 15-minute as a result of this last 4-hour break, right? You had 15-minute major break structure right here, aka they took sell side right here on the 15-minute real quick. You can see this big impulse move. It's the same confirmations over and over and over again, right? And then I look at also where price was respected, right? It's the same thing, the same schematics I just showed you. And in that case, you can see that you're inside of an obvious H4 order block right here to the, and make that a 15-minute zone, right? And you can see where it was respected. It's the same confirmations, right? And you have the buy side liquidity that was obviously taken right here on the 15-minute as well. You gotta mark that up too. Oh, my bad, that's the wrong one. So you have the buy side liquidity that's taken on the 15-minute in order for this 15-minute order block to be mitigated, right? This was the order block that caused the break of structure right here. This is the order block that caused the break of structure right here, right? It's the same confirmations, 15-minute mitigations, and you can see where this one was respected as well. It tapped into this one. So I guess you could draw that in as well. But if you want to kind of see the areas where it was respected, and then you just match liquidity with the order blocks. It's pretty simple actually. And then it gives you a high probability scenario as to what's going to happen next based on liquidity, order blocks, all of that. So you can see that this was tapped into. This right here was tapped into, right? Buy side liquidity. What happened prior to that? What happened prior to that, right? Prior to that, there was a price came down, came up, created buy side liquidity. This was the impulse move. This impulse move happened as a result of the 4-hour being mitigated. So now they have buy side liquidity, had a complete change of structure. You can tell that they were chasing sell side, change of character right here, break of structure, break of structure, break of structure right here, another break of structure, and then price came up. And now they're taking the majority of this big impulse move. You can see that they never violated this here, right? Referencing back to the 4-hour real quick, you can consider this a strong high right here, actually. Grab. You consider this a strong high, you consider this a strong high. This should not be violated at all to the upside. If it does, then you're likely incorrect on the area. But if you use these principles and just literally see how liquidity is taken, right, you can see what's going to happen next. So they created buy side liquidity on this impulse move down, took it, mitigated this order block right here, mitigated this order block right here. And same thing, if you draw your fib right here, it's in premium territory. Wick to wick right here. Let me grab it since it didn't want to cooperate with me the first time. Boom, deep in premium territory. Look at that. Pretty easy, right? So if you use your tools and then your knowledge to just execute the trade, it'll be good, right? 15-minute time frame. After that, you had a continuation. Price took major sell side on the 15-minute, created some buy side on the way down. This is your new impulse move, right? Latest impulse move that broke structure right here, as per I taught. This is going to be your new strong high on the 15-minute. Price will not violate that, right? They've already shown you that they are not going to violate that. Price took major buy side, mitigated it, came down, took major structure again, right? Right here. And this is like kind of like order flow one-on-one, right? You can use this to take counter trend trades and everything else once you kind of get good at it. I would recommend backtesting counter trend trades and kind of like, backtesting it, right? Backtesting is very important, right? So now that I know that this took 15-minute major sell side right here on this big impulse move, this is my new trading range. This is impulse move. This is my new strong high too. Price should not violate that, right? And we're also going off of the H4 sell side or buy side, my bad, that we actually marked up in the 4-hour. So this is my new strong high. And now I know that price will not violate that right there. Price will not trade above that that move right there. So now, right, at this point, it kind of leaves you at a point of like mitigation. You know what I mean? A point of, and what I mean by mitigation is like price has to take buy side before it takes sell side. Let me draw in this little 15-minute OB right here. All right, so I'm gonna drag this all the way over to the right. That's like the latest one that I actually want to use. And all I did was follow liquidity and follow where order blocks were respected. This order block is untouched, unmitigated, hasn't been touched yet, only has created broke major structure, took in sell side liquidity on the 15-minute on this impulse move via this big move right here. And it created a lot of buy side liquidity. And this is via the 4-hour, right? And this is the 4-hour buy side liquidity that we marked up earlier, right? So you can pull that over to the right, pull your zone over to the right, right? And then go down and see like what's been going on, right? What happened? Again, it came up and took another bit of major sell side liquidity on the 15-minute, right? What does it have to do next? And this is that 4-hour bigger structure right here, but it's reflecting on the 15-minute. What does it literally have to do next, right? Well, let's see. It has to buy off next in order to chase the buy side, right? So let's see. We have an order block right here, a bullish one. And this is likely going to be the area that it's going to buy from because this lower high right here got violated. That's a change of character, unconfirmed bullish trend. Price came down, mitigated it, respected it, came up, technically traded above this lower high right here via this wick right here. So yeah, a change of character, a retest, a break of structure, and now you're in the middle of another retest. So I'm willing to bet price is going to buy from there, from this area. If it doesn't, that's fine. It'll buy from one of these areas. I'm not looking to get into a buy though. Price is going to, since you know that it has to take buy side and you have the 4-hour in line, right? You know that price is going to likely just continue up here pretty aggressively in order to take the buy side, mitigate my latest order block that I have right here, and then short from there, right? So with that being said, this is my area based that I'm looking for, my point of interest based on the 4-hour time frame structure, 4-hour time frame liquidity, the fact that the 4-hour recently took major sell side liquidity. Now you know they have to take major buy side liquidity in order to get into that. So I'm using the 4-hour buy side liquidity in order to enter on the 15-minute. So all I do is mark up where the 15-minute have been respected and just follow liquidity via the rules and the things in the PDF so far, right? That's all I've done so far. Nothing crazy, nothing fancy. So I know price is going to take this. All of this is buy side liquidity. That being said, let's go to euro New Zealand dollar. I've actually already done this pair. My analysis for this pair is the same thing. Major sell side liquidity here they took. Now they're going to go off and have to chase buy side next into my point of interest. And like I said, this is a strong high right here, in which I actually forgot to mark up myself. This is a strong high right here. It should not be violated, right? At all, because this is what started the break right here in order to take major sell side, right? So now I have a kind of scenario, right? Price, and these are two different vendors. That's why you've seen the price action a little bit different. Wanda, I prefer not FXCM because they kind of have lagging data, right? You had a break, you had a change of character right here where my crosshairs are. Price came down and then basically came up and broke structure right here, but you can see the retest and the mitigation perfectly right here. I could take a counter trend trade if I wanted to, but I'm not going to do that, right? Respected this order block right here that was created as alongside this order block that was created on the way down. So you can tell that it's starting to push up in order to actually take that, right? So with that being said, once I've seen price kind of continuing up, taking liquidity here, etc., I'm going to set a limit order right here on this order block where the strong high is, because I know that they're going to come up and take this 4H liquidity and end up mitigating this perfectly as they did right here in order to go for a 1 to 3, or I can extend this to a 1 to 4, right? This week I'm only going from 1 to 3, just kind of shorter R's because it's December. There's a lot of news this week, so I got to kind of trade carefully and wait for news to come out. But like, that's a pretty easy analysis right there, right? There's no guesswork in it. You know what I mean? It's just extremely high probability trades based on liquidity and order blocks and structure and all of that, right? So the buy side liquidity that's left, the next level of liquidity, the next type of liquidity that could even be taken is buy side, whereas the buy side via your higher time frame right here, right? So anything between where price is right now and your actual point of interest does not matter. All of this is going to be destroyed, right? Everybody here in this big impulse move that is going to be destroyed. They're coming up to take early sellers out too, right? Anybody who sold right here who didn't basically trail their stop loss or whatever the case may be, or are not going to end up trailing their stop loss, are going to end up getting stopped out. So it's an easy 1 to 3 for 3% gain, 4% gain, whatever you wanted, right? So that's pretty easy analysis, right? Yeah, I always use my higher time frame, very tight stop loss, because once again, if it trades above this, I was wrong on the trade in the first place. And you can always adapt, right? You can split your risk. You can analyze, maybe if you get stopped out here and price does end up dumping, like it might, you can reassess, wait for another major quick structure right here on the sell side liquidity, and then after that, get in on the next area, right? If it once price basically breaks structure again, because this is going to turn bullish, it's going to create something like this right here, and then it's going to take sell side liquidity again, major on the 15-minute again. Now you have a new trading range again, right? Because this is my trading range from here to here, right? Price should not, the reason why is because this is a strong high, and price should not break that at all, right? So zooming out a little bit, you can see kind of like the schematics of it, right? Price took major sell side right here. I forgot to mark this up too. I'm slacking. Took major buy side right here. Took some buy side right here. Came back down. This is on the 15-minute too. Came back down, took sell side, majorly actually, several times, and then came up, and now they're having to take 4H buy side. The area is obvious, right? Given the rules of the strategy, right? The area is obvious. It's pretty easy. I would set a limit order right here, honestly, after news comes out, to see kind of what the news is. If it's negative news for the euro, that supports your idea even more. Make sure you go to like investing.com or whatever source you use to make sure that you're in line with news and things like that, and make sure you're not getting caught in volatile spikes due to news. But yeah, that's an easy 1 to 3. So typically I'll wait for, if the news hasn't come out by the time the trade happens, I'll wait. You know what I mean? The risk is not there at all. The risk is not going to be appropriate to actually just trying to get into the trade. You're gambling at that point. You have to wait for the news release to come out. Or if you're expecting a negative news release, I guess you can, and you could because you've read the reports or whatever the case may be. I guess you could kind of just take the trade anyways, but I wouldn't advise that. So that being said, pretty easy analysis. This is how you kind of enter on the 15-minute, use majority 4-hour time frame stuff in order to enter on the 15-minute, and the trades become quite obvious, because if they have to take buy side before they short, right? And they recently took sell side, where are they going to chase next? Buy side. Where's the buy side? Right here. Where's the order block that's above the buy side? Right here. You know what I mean? And then you just set your limit order. You can do an aggressive entry like I usually do, or you can do equilibrium entry right here. It really doesn't matter. I like to do mostly aggressive entries, because once again, if we have price trading above our strong high, which almost literally never happens, then you get stopped out, then chances are you were incorrect in the trade in the first place. Because price broke structure, took major sell side, took major buy side, and continued up, right? Also, in terms of how liquidity moves and how I explained in the group, right? The latest impulse move is right here, right? Down, you can see that price is going to end up taking this entire leg right here, right? You can use that as an example too. However you view it, It doesn't really matter, but price is going to take that leg, take the latest high, which would be, actually it would be right here, but this price is going to take this entire impulse leg right here down and end up basically taking all of the buy side up to here, mitigating this perfectly, and then dropping. So that being said, that's my Euro New Zealand dollar breakdown. There is a ton of news this week for the euro and the Great British pound, pretty much every day this week, and the different pairs. It's a really important week in terms of like things happening in terms of people's economies, CPI reports coming out, which measures inflation and things like that. Other things, there are certain pairs that their movement into coming into 2023 depends on these certain reports coming out and things like that, and you have to pay attention to those. You have to be a professional at analyzing the economy. You have to know what these reports mean, and I will be releasing a section in the education on all of that because it's a very essential part of trading forex at all. You can't pretty much be profitable long term without it. Honestly, you have to be able to analyze your stuff as a professional and kind of like not rely on technical analysis only. It's literally impossible when you see those crazy volatile spikes to take you out. That's news. That's CPI reports coming out. That's trade balance reports coming out and things like that, that it might be positive or negative, contrary to your actual current trade idea. And that's why you need to learn how these reports affect pairs and what they mean for the pairs and things like that. And that's kind of when you kind of add that to your knowledge. You know, it might take you 2, 3, 4 months to understand. It might take you less time to understand. It might take you only a few weeks to understand fully. But you have to know what these mean and what economic events, for example, the euro was being affected by the Ukraine war, right? Big events like that are going to be huge, right? The fact that Europe is having an energy crisis and going into a recession right now, and the energy crisis came mainly from Russia cutting them off in terms of their gas, natural gas, and stuff like that. Like things like that are going to be huge. You have to make sure you're in tune and you're paying attention to the world, you know, specifically the economies and what's going on in the world, right? So if the United States goes into a war in 6 months, that's going to be negative, extremely negative for the US, right? The US dollar, right? The US dollar is going to be selling, right? If inflation continues to rise, that's going to be negative for the US dollar. You know what I mean? So just things like that. Like I said, there would be a whole section on it, but that's my analysis for Euro New Zealand dollar. I do believe that price is going to continue up here and then have a nice sell-off compared to the New Zealand dollar. New Zealand dollar is not going to stay strong forever. It's actually predicted to become weak quite soon here. So I'll be looking for New Zealand dollar, US dollar sales soon too. I just have to wait for a few things to come out in terms of reports and things like that. So going into January, I mean, this is a really huge week to have to pay attention to in order to kind of get ready for a Q1 2023. I have the advantage of being a lifetime member of Prime Market Terminal, and I have some more data as well in reference to that. You have retailers, and I just wanted to do the technical part before I even looked at Prime Market Terminal because everyone has Prime Market Terminal, right? 71% of retailers are buying this pair. We always trade against retailers. We do have a bearish predicted candle. You're looking for a setup on the on the H4 with a high of 165,798. 165,798 is right here. I've noticed that lately on Prime Market Terminal predicted levels tend to be liquidity, right? 165,798 is right here, but that's where the buy side liquidity is. So I like to see institutional footprints above the predicted levels, especially if you're entering on like the 15-minute and stuff like that. A bit more precise if you're swing trading these predicted levels, but and we also have what else? New Zealand dollars in red. You can see that the currency strength of the New Zealand dollar left off doing better than the euro down here. So that's also some more confluence with that. Also, this is the institutions and their stuff like that. And I might change this from the actual like numbers to like the graph because I think that's a little bit easier to read. But you can see right here, if I scroll to the right, they're currently net negative in their position on the euro still. So a lot of confluence to take the short along with fundamentals. Pretty easy trade. To be honest, there are, like I said, some news reports coming out that will affect, that may or may not affect this, but there's some high impact news coming out that I'm going to pay attention to on Monday before this ends up being a thing. Also, you have seasonality currently is bearish, and retailers are trading against seasonality and also trading against the net position of the banks as well for more confluence. And if you're looking to short, again, you have supply and demand areas for confluence at 165 not ironic that the actual pair is rejecting 165 for the high, 165.798. So in line with that supply and demand level as well. And you have a lot of confluence for this trade here. In order to go short, you can go 1 to 3, 1 to 4, something quick, because it's December. Volatility is not going to be the greatest, but this is a very important week for kind of to set the tone for 2023. So I would recommend taking this analysis and kind of learning something from it, taking something from it, and using it in your own trading. If you prefer to enter on like the 1 hour and the 4 hour, it's exactly the same. It's just that on the 15-minute, you know what I mean? The candles break down just a bit more, but the confirmations and the buy side and sell side liquidity and structure and all that, it's all going to be similar or the same in how it looks. So if I go up to the 1 hour real quick, you can see that it's literally the same. All you have to do is kind of like the order blocks are going to be different, obviously, because it's the 1 hour. But you can see where the 1 hour respected the proper order blocks and things like that, and where the buy side liquidity is. You would have to just change your order blocks basically, and that's about it. Pretty easy analysis. I'm going to be doing a lot of similar trades like this. I'm looking to short a few pairs this week, and I might, maybe touch a few pairs this week, and then call it a week, and that'll be my 2022 year. Get an extra like 6 to 7% this week or something like that, possibly 9% if I have a great week, and go from there. So if you got value out of this video, drop a like, subscribe, let me know what's going on with your trading in the comments. Let me know how this, how I can help you with the trading and things like that. If you do want education and things like that, the best Christmas gift you can get to yourself is learning how to trade. You know what I mean? That's going to be something that you want to do. I do have signals as well. Signals might close for the year. I mean, honestly, I'm not going to even mention the signals, to be honest. It's going to be close for the year until January when volatility picks back up, because I don't want someone to start a subscription and then, they can't really get trades like that for almost 2 weeks. It just doesn't make any sense. So I'll see you guys later.